right, Tajudeen Olayinka joins me right now. He's the Chief Executive Officer at Wyoming Capital and Partners Limited. Mr. Olayinka, thank you for joining us this morning. How are you doing?
Morning, Nancy. I'm good.
Okay, let's go ahead. But I guess we should start from how the market closed last week. Just close to a 0.75% gain for the Nigerian stock market. The year-to-date return about 17%. Speak to me about that. What happened last week?
Okay, last week was just a week of modest recovery in the market. Even though part of that recovery started a week before, but last week was quite spectacular in the sense that more days in that last week had positive showing, and so we saw recovery of the market. We saw those traders that actually went out of the market earlier, coming back, taking position, either to benefit from interim dividend that some countries are paying, or to actually look at the push of the market to say, okay, yes, market is still okay for me. Let me come in now, since the other time that I left at a much better price. Let me come in now and take advantage of this momentous event. So clearly, more investors, especially those of them who are involved in active trading, institutional investors, some few little investors normally join them. But clearly, what happened was that those investors, the traders that understand the dynamics of the market, were actually the ones that came to the market last week. And of course, when they are doing that, they tend to drive the share prices up. And so we saw some modest recovery last week, just to show that yes, market is still there, but of course the headwinds are still there. Yes, 17% return. That was just before that, the index had dropped to something around 16 or so. But that 17% was just to show that yes, from time to time, market will have that capacity to to adjust to inflation, and that was just what we saw. It was a good market last week. We hope that we'll have a semblance of that this week, even though the headwinds are still there.
Okay, from your analysis, it was a good market last week, but if you take a look at the year-to-date return of the stock market at around 17%, it's still below inflation rate of 19.6%. So how do a stock market investor really balance that out in order to avoid, losing money in the stock market?
Okay, yeah. Inflation itself is always an issue. It's a phenomenon. You try to beat it, but if you want to understand whether the market has really done well in terms of hedging against inflation, you have to take it from the time that the reference point for the inflation number that we have. The inflation number we have, the figure that we have as of today is the July figure, which is 19.64%, and that 19.64% was a comparison of figure of was CPI of July to CPI of July 2021. So that was one full year. But if you look at the market year to just 17.something%, I mean, telling that from January to July, from January to August. But I won't take it to August, since what we have is 19% as at July. Let me take it back to July 2021. That's the best way. You have to put it on pedestal. July 2021. What was the all-share index? Because they are both of them are measuring movement in prices. So all-share index at that time was about 38,000. Anyway, in a nutshell, if you take it from that point, July 2021 all-share index to July 2022 all-share index, you will see that the index actually moved by more than 30%. That is an inflation hedge of about 10.5%. So clearly, markets are still done much better than inflation. But if you want to compare it if you want to take it by 17% year to date, which is from January to August, then you have to also adjust the CPI that you are considering in terms of inflation. It has to be CPI as at that January 2022 to CPI as at August 2022. Since we don't have August figure, we still have to rely on the July figure that is still in the public space, which is 19%. So clearly, for me, you have to analyze it. Even if you take it up and you analyze it, you still have an inflation rate of about 10.5%. So markets from time to time will continue to adjust to inflation because you are trading equity, you are trading with stocks issued by companies that are involved in business, in real sector business, in banking, in services, those things that businesses that must remain in the market because they must also adjust to inflation. So those are the reasons. I think so far, yes, market has done well. But how does an investor navigate this process? You like I mentioned the other time when I appeared on your program, you need to deal with people, professionals who understand the market, who can take you through it. There are some stocks or sectors of the market that usually will have a better hedge against inflation. If you look back to what has happened in the telecom sector, those two companies there, those two key companies there have done well over the last 1 year. If you take it from again July 2021 to July 2022, you will see clearly that those two telecom companies, Airtel and MTN, have done well in terms of hedging against inflation. And of course, if you also consider other factors, other metrics that will make an investor to be able to hedge against inflation, you see that there are even some companies, even though the sector might not have moved so fast in terms of giving a good return year to date. For example, consumer goods sector, there are some companies there that have also done well. The same thing with agri sector. There are some also companies there that have done well over the last 1 year. And the banking sector is the one that has not really, it doesn't show so much some kind of uplift, and that is just because the stocks in the banking sector are actually liquid stocks, and that sector is a sector that CBN seem to be competing with in terms of providing credit facilities to either government or to some key private sector businesses. So those things are affecting that sector, but that sector remains the only sector that has opportunity to move with surprises, to move to a level that can make investors to be able to hedge against inflation, because the prices in the price of the banking stocks are quite low at this time. You don't expect banking stock to trade at those prices. Even if you look at their half-year results, all of them did exceedingly well. And for that reason, I think investors can also look at that sector. If they are trying to hedge against inflation, because prices there are still low, and there's no way the prices will not move higher than what we are seeing currently. So those are the things. But if you must do that, don't go there on your own. Seek professional advice. Talk to professionals, brokers, or asset management companies that are involved in constructing portfolios or helping clients to navigate the turbulent water of inflation and what have you. Any economic challenges, they understand it. So clearly that's the best way to go. There are good stocks that can still do that, and I think the best bet is to actually seek professional advice. Don't go on your own. It's always very dangerous to enter the market without seeking that professional advice. Even if you think that you know it all, it's still better to consult with them. I mean, share views with them before you enter the market.
Okay, Mr. Olayinka, you said quite a lot, and let's take it from there. That, of course, the stock markets, if you take a look at it on an aggregate level, from your own position, that is done well. I like your analysis on the inflation adjustment, but at least for those that are in the market currently, the next question is it a wise decision to get into the market right now that we have high inflation at 19.6% for a new entrant?
Yes, it's the index was 53,000 index points before we had these two major shifts in the market, especially the May MPC meeting that it gave 13% as MPR, and the subsequent meeting that also gave 14% as MPR. So index was quite high, but index has adjusted to those decisions of MPC. Anytime you have that kind of situation, you tend to see market behave this way. Investors normally want to reprice securities, and those repricing, the repricing we saw since the beginning of May, when the first MPR was raised to 13%. It has pulled it has actually put the market on a prolonged repricing mode because of two subsequent two quick succession of interest rate hike. So for that reason, yes, index has really moved down to a level where investors should begin to consider coming back to the market. Yes, you can. So investors can come in now, but when you are coming in, don't just think that the prices will move to a level that you want to see it. You must have long-term interest. You must have long-term focus for the market. If you don't have long-term focus, don't go near it, because we still have those headwinds. Unless TBN is able, maybe when we see the inflation report for August, and then when we see inflation result for August, we then know what CBN might be doing. At their next MPC meeting, Gordon Emefiele said that once there's inflation again, they might also want to consider further hike. So this hike in interest rate is actually creating problem for equity market. Anytime there is a hike, the market goes into repricing mode. Every investor want to reprice security that they are having. When I say repricing, they want to sell out even if it's at a loss to call their losses, or even if it's at a profit to take those profits at that time and come back to the market later. Sometimes some of them will leave the market to go to fixed income market and come back later, but not many of them do that, because moving from one market to the other comes with a cost. There are transaction costs, and so some investors might want to be very careful, not wanting to just take on those transaction costs that eventually will negate whatever benefit they will get. So anybody want to go to the market now? Yes, you can, but you must have a long-term focus. The market is not a short-term market. Like when we say it's going to beat inflation, you can see the analysis I did from July to July. If you are looking at it from January to July, it would look like nothing has happened, but really something significant has actually taken place between July 2021 to July 2022. So you must have a long-term focus. Somebody who entered market that time will not be complaining of inflation distorting its value. But today they can smile to the bank if they choose to sell. So anybody want to come in can come in because prices are actually low, especially for the banking stocks. The banking stocks are having extremely low prices that there are no basis for it. It's just exuberance of all these key traders, all these some of these savvy investors who try to distort the market. But the prices of stocks in that space, especially the banking stocks, are actually good. Anybody who want to come in can come in. Zenith is good, GTCO is good. Although those prices are just dash. They're like dashing somebody money. So for me, anybody who want to do that should go to pick those stocks that are priced that have low prices at this time. But let me say that. Let me also add that it's not that you won't have challenges again, especially if CBN comes up with new MPR rate of maybe 14.5 or 15%. We don't know what they are thinking of. But the moment we have inflation in August, of course, that's so certain that CBN may want to tinker with the MPR again, and so that's why whoever is coming in must also add that to what will give it some kind of temporary disturbance. But eventually market will recover. Anytime you see hike in interest rate, it's always a temporary issue or a temporary threat to the market. Market will surely recover, because equity market is an inflation adjusting market.
Okay, you talked earlier on about the ICT sector. I want us to expand on that. As it's now, I think the ICT remains the largest sector, because if we saw what the ICT sector has done, I think it's been able to pull close to 4 trillion naira in terms of market cap. What are the things driving this in the ICT sector? I also do know that the GDP numbers that the MBS released just, was it last week or so, indicated a growth in the ICT sector. Bear also in mind that this is a sector that the stocks are not really cheap.
Yes, they are not cheap, but if you can, if you can still buy a stock as you can still put as low as 5,000 naira there. Only that you have few stocks, and for those who want to, those retail investors who want to take advantage of those I mean that particular sector, it's better to use enter through a mutual fund. Mutual fund, even if you have 5,000 there, a stock of 1 billion, you will benefit from whatever other investors will benefit by being part of that 1 billion, 1 billion naira portfolio. So it's good for retail investors to approach mutual fund. Go buy into a mutual fund. If you want to, if you have small amount of money to put in the market. But those big guys who are playing that market, they know when to enter that market, and they know that no matter the price, it's still the stock to buy. Now let me tell you why these companies have actually done well. I mean, that sector has done well. When we trade financial instruments, what we are actually doing, we are negotiating, we are trading cash flows of those companies. We are trying to say, okay, this company has done well this year. The next year and the years to come, we also do well, and this earnings will be sustainable. So clearly what we are doing is to trade the earnings and earnings prospect of those companies. Once we see that a company has a good history of earnings, and going forward we'll also be able to maintain or sustain those figures, you tend to now show interest in the stock of those companies. The same way we trade fixed income securities. Anytime we are the same method. What we are trading is earnings and earnings prospect. And in case of fixed income securities, we are trading those cash flows, those coupons that the issuer has said it will pay from time to time. Those are the things we are negotiating. Those are the things we are pricing. And we now begin to bring interest rate and all those other microeconomic variables, to shape what that price should actually be. So for me, yes, the prices are high, but if you know that that sector has a very strong earnings prospect, then you want to be part of it, because no way, no how. Nancy, if you leave home without taking your phone, you almost want to rush back home, before getting to the studio, because that phone is very important to you. It's not only using it to call. There are so many things you do with your phone, and so that is why that sector is actually doing well.
Okay, Mr. Olayinka, we have. I would ask these 2 or 3 questions, and perhaps you can answer in 2 or 3 minutes if you can. Campaigns will be starting later this month, just in a few days from now. What are you and your colleagues anticipating? That's the first question. The second question is, when the election starts, when the campaign starts, are you anticipating what kind of, what will be the impact on quoted companies, so to speak? Then the third one is, Nigeria is in a fiscal crisis right now. In fact, as we are now, perhaps we are broke. Do you think that the Nigerian stock market can actually save the Nigerian economy at this time? Also, bearing in mind that the federal government has crowded out, the private sector in terms of borrowing in the market and all of that, can the Nigerian stock market further save the country?
Okay, the first one is
campaigns.
I think I need to. I was just trying to, understand, which area you are looking at there. Can you just repeat that first question again?
Okay.
I'm sorry about that.
My first question was about campaigns. The campaigns, elections, campaigns will start.
Campaign. Okay,
yes.
Okay. You see, Nancy, professionals have different view about how the market should behave during campaign. Especially when you are in an electionary year. For me, I think most of the argument by some analysts are baseless. When they say that because we're in an election year, market should go down, I don't think so. I have a contrary view to that. Why should market go down? Because it's an election year. Now, the people who play the main actors in that scene they are not the one that will put money in the stock market, because even if they put money in the stock market, they tend to get out much earlier than they intend to use the money. They will not. Somebody who's going to campaign, in September or in October, will not put money in stock market to be able to campaign in October. So most of them have exited the market long before now. And those who may wish to exit the market in the course of campaign are people who are supporting them. And those ones are also, that's just be a small fry, because the market has the capacity to take them out. The local investors, domestic investors have shown that they can support the market from time to time, especially when prices are right. Now, why are people saying because of election, the market should go down? Because they fear that there will be crisis. No. The fact that we are going to have election is a positive development. And the fact that the three gladiators there, the three key players in that space are pro-market. They are if any of them become president, you are not likely to have a repeat of what Nigeria has gone through in the last 7 years. We are not likely. These people that are coming are pro-market. The person that is there now is not a pro-market. It's more of a public sector focused president. He prefers to be the one financing, be the one investing in most things around the economy. But the people that are coming will want to use private sectors.
Okay.
So to me, that's a positive development because of the actors that are coming in. Then the other aspect of it, whether the market will be able to move and that. I think my first response has actually cleared that fear. It has cleared the fear in the sense that markets should actually do well, because these people will be spending during campaign, and those spendings will find their way back into the market. Even though CBN may also want to be sure that it does not allow that to spike up inflation again. But of course, from time to time, markets will be able to absorb whatever is coming from that area. Then for the fiscal space, it's unfortunate that that is the state we have found ourselves, going through excessive borrowing and getting to a point where you now have to use the entire of your current revenue to pay back debt, and of course you have to borrow in addition to that to be able to service debt 100%. So that's a disturbing signal. But you see that the market has been able to rock that, has been able to moderate itself, adjust itself to that situation. The market is already used to seeing that kind of situation that government, like I said, the reason why government is overborrowing is because this administration is public sector driven. It's not using a private sector. It's not running a private sector driven economy. It's public sector driven economy. So for that reason, you tend to see things this way. It's for a short while. By February, by May next year, we'll be out of this trouble. And I believe by the grace of God, God will surely smile on Nigeria again, and everybody will tend to smile. With those three politicians, those three actors, either from Labour, from PDP, from APC, the three of them are pro-market. So economy will be much better than what we have gone through or what we are seeing at the moment.
Okay.
So I think it will be a positive development for the market.
Thank you very much, Mr. Olayinka, for your thoughts. Quite interesting that the three main actors are pro-market. We'll interrogate that further, even as we enter the campaigns later this month. Thank you very much, Mr. Olayinka. I've been speaking with Tajudeen Olayinka, who is the Chief Executive Officer at Wyoming Capital and Partners. We've been looking at the Nigerian stock market, inflation, and economic uncertainty. That's the much we can take on today's edition of the program. Thank you all for your company. Please join me again, same time tomorrow on this station. I am Nancy Naji, and continue to be the best you can be, and that change that you want to see, because that change actually that we need in Nigeria begins with you. I'll see you all again tomorrow. Bye now.